Welcome back. I'm Pratap here. Today is 8th August 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel homepage, click on the community tab, then you get access to this post. This post is having a YouTube playlist link that is having all the training video lessons. You just click on the YouTube link. I'm clicking on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have around 62 training videos are available. All these videos, 62 videos are from 24 lessons. The most recent training lesson is lesson number 24 at the time of recording this video. Even to access the first lesson, scroll down to the bottom of the page. Here you have the first lesson number 1.1, lesson 1.1. So starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new video or any other important update, we will provide at the Telegram channel. Now let's get into the analysis discussion. Yesterday at the end of the market hours, we identified 1, 2, 3, 4, 5, 6, 7 high liquidity zones. Excuse me. 7 high liquidity zones from daily and 75 minutes time frame. Out of these 7, 3 trades are executed and all the 3 are successful trades. So let's look into the trades one by one. The first one is Godrej properties. This is a drop, base and a rally candle. You might be wondering, is it a rally candle or a failed ERC candle? You already learned these concepts in your training videos, especially in lesson 9.3 and 9.4. I explained about hidden body and hidden zones. Exactly this comes under that concept. Our software identified. Our software is having all these intelligence. So here you have if you add the hidden body, this is going to be a rally candle. So it is a ERC candle and also a rally candle. So that is the reason why this is a drop base rally. And this is the 75 minutes high liquidity demand zone. And we have fine tuned this high liquidity zone with 15 minutes time frame. So in the 15 minutes time frame, you have a drop, you have a base candle, and then you have a rally candle. And this is not a valid zone. The reason is here we have a drop, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So easily such kind of price action will be violated easily. So that is the reason why this is the only one valid drop base rally is the. So you might be wondering, this is a drop candle. Add the hidden body. The moment you add the hidden body, it get enough body here to qualify the leg candle, and after rest everything looks like a very big wick. So ERC candle having a sufficient body to qualify as a leg out. So that's why drop base rally with a hidden body. And then this drop based rally, the 15 minutes candle, the 15 minute zone again fine tuned with 5 minutes time frame. Again here you have a drop base rally, the 5 minute zone drop base. Here you have institutional order flow. But have you observed here I have selected the type 3 proximal. Why not type 2 proximal? If you draw type 2 proximal, it will be like this. But why I have gone for type 3 proximal? The reason is RR. Type 2 proximal, I didn't have enough RR. See here, let me adjust to the type 2 proximal. I got only 1:2 RR. 1:2 RR is not valid for taking. That's why looking for type 3. You may ask a question. Now prices reach type 2. Okay, in this scenario today we got the trade. but sometimes prices entered up to the type 2 and then again they move up. In that case, you don't take the trades. Simply we ignore the trade because we don't have sufficient RR. The reason why we have gone for type 3 proximal, the reason is we got almost 1:4 RR we got. Some 3.8 RR, close to 1:4 RR we got. Okay, RR is okay. Risk management is okay. Only thing is, prices will really reach this type 3 proximal or not, because the type 3 proximal, many times we will be missing the trades. Okay, if you miss the trade, fine, it's okay, because anyway you can't take the trade because RR is not there. Up to the type 3 level, if the prices come, we get a chance to take the trade, and risk also very minimal. Due to any reason, if the zone is violated, our stop loss will be very less. All these are all advantages we have. And moreover, there are higher chances that the trade will be executed because this is a high liquidity zone. In high liquidity zones, the success rate is more than 80%. Failure chances are less, success rate is more. So that is the reason why always we are taking trades at high liquidity zones. For the last 9 months we have seen the failures are less than 20% in high liquidity zones. And many times average intraday ROA we are getting around 6%. Sometimes below 6%, sometimes above 6%, sometimes near 6% we get. But on an average, we are getting intraday ROA 6% as per one futures margin cost, because we are calculating based on one futures margin cost. So because of all these positive factors, we have gone for type 3 proximal. And today see what happened at morning 10 o'clock 5 minutes, the prices entered into the zone, our trade is executed, and after that you see the rejection and see the movement, and finally at 10 o'clock 30 minutes candle, it reached the target. And this is the way we got around 6,600 or 500. Let me show you the exact statistics. 6,795 rupees profit we got as per one futures margin cost, which is 4.1% ROA. Of course, it is less than 6% our average intraday ROA, because every time you can't get above 6% or exact 6%. Few trades we get below 6%. See, earlier trades we got above 6%, few trades. Few are very close to the 6%. But all this together, average we will be getting close to 6% average ROA. If you look into all these trades, so far we have an average of 5.63% so far during this month. But only 1 week is completed during this month. We have 3 more weeks are there, and we will get more trades. And we may get more trades above 6% in the coming days. Finally, at the end of the month, we will be getting average ROA 6%, a little below or little above, but close to 6% we will be getting. But today we got this trade, a successful trade, and more importantly, we got the trade at 10 o'clock 5 minutes candle and completed the trade at 10 o'clock 30 minutes candle. That means within 30 minutes, our trade is completed. That means whatever the profit we got today, in just 30 minutes, 6,795 rupees profit as per one futures margin cost. You may ask a question, what is the advantage if we complete the trade in 30 minutes? The advantage is your money will be released, and same money again you can use for another trade if there is any other opportunity available. Today exactly that is what happened. Today we got 3 opportunities. All the 3 opportunities we did not get simultaneously. We did not get. One after another only we got. That means today with the same capital we got 3 successful trades, and all the 3 together it is going to be a 13% ROA you got with the same capital. 13% ROA we got if you combine all the 3. Because the same money, a trade is completed, next same funds again you invested for another trade. That way you would have planned your trades today. And the total, how much all the three trades, 25,000 profit you would have got today. If not 25, because one trade, you need double the capital for one trade, last trade. But remaining trades, 1.5 lakh is enough for, or little less than 1.5 lakh is enough for your intraday futures margin cost. The third one is expensive. It is around 3 lakhs. Even if you would have gone for intraday trade with 1.5 lakh, still you would have got half of this money. Maybe close to 5,800 something you would have got. Still you might have got a profit 18,000, close to 18,000 rupees profit with the same capital. If not 25,000, at least 18,000 profit you would have got. Anyway, that we will look into those things later. First, let us look into these trades. First, this is the first trade, a successful trade completed. And after completing, when this trade is completed, at 10 o'clock 45 minutes, sorry, not 10 o'clock 40, this is the one. 10 o'clock 30 minutes candle, the 5 minutes candle, the trade is completed. After 10:30, we got another trade, that is Navin Fluorine. Navin Fluorine is also a 75 minutes high liquidity supply zone. We have a drop base drop is there, drop base drop. And this we fine tuned with 15 minutes time frame. Here again 15 minutes. We have a drop base drop is there. This is, you can consider ERC at 15 minutes level, base and drop. And within this area, within this 15 minutes, again we have a fine tuned 5 minutes zone. See here you have a ERC candle drop as a leg-in, and you have 3 base candles and again a drop candle and then very good follow through candles. So here you have a 5 minute zone is available. And today what happened? You got the trade in this candle because the price is within the stop, within the entry buffer area. You have 3.5 rupees entry buffer is there, but I think only with 2 rupees entry buffer itself you got the trade. Because the price is 3,644 something, and but the trade, the highest possible price could be 3,644. That's 646. So with 2 rupees entry buffer, maximum you can take 3.5 rupees. You can add the entry buffer. With just adding 2 rupees, you would have got an entry. I'm just telling you how you can get the entry. Okay. And what about the target? Target is 15 minute zone. So here you have a 15 minute zone. We have ERC candle, leg-in, 2 base candles, and a rally and follow through candles. Okay. This is the 15 minutes candle. And when you got the entry at 11 o'clock, when the earlier trade was completed at 10:30, within half an hour at 11 o'clock, let me go to the 5 minutes, so that at 10 o'clock 5 minutes, at 11 o'clock 5 minutes candle, you would have got this entry. And when it reached the target at 12 o'clock 5 minutes, at 12 o'clock 5 minutes, it reached the 15 minutes target. After that the zone is violated and further it moved up, that is a different story. But at least until this 15, if anybody would have used some trailing stop loss based on 1 minute, maybe you would have got more profit, or maybe you would have exited here itself. But anyway, I am calculating up to this immediately available 15 minutes target. And Navin Fluorine has given a profit 6,825 rupees as per one futures margin cost. And I think this you got even for 1,30,000 margin cost itself, you got this future. So 5.2 intraday ROI we got. intraday ROI 5.2%. Even though it is a little less than 6% intraday ROI, but 5.2% is a very excellent. Anything above 2 or 2.5 is an excellent intraday trade. That is what you should understand. But high liquidity zones are giving an average up to 6%. That is a different story. That's why always we are preferring high liquidity zones for getting more profits. Of course, success rate is also very high. So when it is completed, this trade at 12 o'clock 5 minutes. Okay, your second trade is also completed. After completing this trade, around 12:30, you got one more trade. That is Chambal Fertilizers. This is also a 75 minutes high liquidity supply zone. You have a rally, you have two base candles, and then you have a drop candle. Rally, base, drop. And this 75-minute zone we fine-tuned with, this is the 75-minute zone. Identified by our software, we have rally, two base candles, and a drop candle. This is what the high liquidity zone identified. And recently prices again moved into this area. Here again we got the trades at 15 minutes time frame. So this is the 15-minute zone. We have a rally, base, drop. Here we have a fine-tuned 5 minutes high liquidity zone that we will see once we get into the 5 minutes time frame. Then again you have a drop, base, drop, and then again you have a drop, base, drop. So you got multiple trades here. A rally base drop is the first one, and then drop base drop is the second one, and again drop base drop is the third one. We have 3 15 minutes fine-tuned zones are there inside the 75 minutes. These 15-minute zones again fine-tuned with 5 minutes time frame. So let us look into this, how I fine-tune these zones. Okay, this is the first one, top one. We have a rally, 3 base candles, and a drop candle. Rally, base, drop. And this 5-minute zone is having multi-testing. This is the tested one, this is the tested second time, this is the tested third time, and again fourth time, multiple times. Probably this could be a high liquidity zone. That is the way we can at least conclude, because multi-testing is there. At least 80% scenarios, or 80% not scenarios, 80% confidence level. I'm not saying 100%. There are few other rules software identifies, but at least 80% confidence level, we can assume this is a high liquidity zone. Maybe next time again prices are entering, we can take an opportunity. We can look for an opportunity in this area, even though it is tested multiple times. That is the advantage we have with high liquidity zones. And next one is ERC candle as a drop and a 2 base candles, and again a drop candle. This is another fine-tuned zone, 5-minute zone. And this is the zone where we got the trade today. We have a drop, we have a base candle, and again we have a drop candle, ERC candle. And some follow-through candles are there after that. So these are the 3 fine-tuned 5-minute zones. And we got a trade in this particular zone. This is the first trade actually it has given. We are not considering. The reason is we have already in the trades of these Godrej Properties and Navin Flow, at least especially in Godrej Properties trade, we took. So that's why let us assume we didn't take this trade. And we got second opportunity after closing the Navin Fluorine. When we closed Navin Fluorine at 12 o'clock 5 minutes candle. Now this is at 12 o'clock 35 minutes candle. At 12 o'clock 35 minutes candle with small entry buffer, very small, because the price went up to 524. And the proximal line is 524.25 paisa. Just by adding 25 paisa entry buffer, you would have got a trade here. Or even 30 paisa or 40 paisa, maybe whatever the limit. But at least a minimum 25 paisa entry buffer, you would have got this trade. Maybe you would have got even more. At least up to 50 paisa you can keep, 0.1%. Up to 50 paisa you would have kept 50 or 55 paisa. Maximum you would have kept. But 25 paisa is enough to get this trade. That is what I want to say. Okay, what is our target? 15 minutes target. This is the 15 minutes target. We have a ERC candle as a leg-in, we have a base and we have a rally, and this we can consider as our 15 minutes target. But today it failed to reach this target. Almost close it came at the end of the market hours. But it didn't reach until this. But you will not be holding your trade till the last minute of the trading hour. At some point you need to exit, right? So this is the area what I have drawn. Why I have drawn this zone? This is a 1 minute zone. This is acting as a high liquidity zone. Multi-testing. This is not letting the prices. This is actually acted as a speed breaker today to reach the price up to our 15 minute zone. Excuse me. At last minute today, at last half an hour or last 45 minutes only, this zone is violated. Till then it holded the prices. See, it is already holded first time. This is again second time. This is again third time, almost close, third and fourth, and finally fifth time. Now after that, the price is violated. At the sixth attempt, this is violated. And after that, price sharply moved up to this near to the 15 minute zone, but by the time market is closed. Otherwise, definitely it would have achieved, because there is no enough time to enter into this zone, because this is only last 45 minutes trading session, price action. But definitely you would have exited at some point of time. Maybe here or here or here. This is the last opportunity. This is 1436. Generally we at 2 o'clock 45 minutes maximum we will try to close our intraday trades. But if you take in future, you can hold the trade till the last minute. If required, you can carry the trade till the next day. That is also possible. But intraday, if you want to exit in futures or options, you can carry the trade till the last minute of the closing session. You have that advantage is there with futures. But if you take a pure intraday trade on cash segment, definitely a maximum 2 o'clock 45 minutes you can hold, not beyond that. Some brokers may close by 2:30 itself. So that is the reason why I am considering up to this zone only, because at some point of time definitely you will exit in this area, because this is strongly holding the prices. At least you would have exited here. You took a trade here. After closing Navin Florine, let us assume you would have taken a trade. Either you would have exited near to this, or maybe exactly here. Here you would have exited in this candle. But after that, this zone is violated, further sharply came down. So that's why till this 1 minute high liquidity zone area only I am considering the target. Even though your initial target is 15 minutes, today it failed to reach the 15 minutes target, because the 1 minute zone strongly holded the prices. So at some point of time you have to exit near to this zone or exactly at this zone in this candle. Okay. So this is the reason why our profit is we are calculating from our 5 minutes fine tuned area till this 1 minute high liquidity zone area, your target. Even then you got a profit of 11,400 rupees, otherwise you would have got double the profit. And you would have achieved your intraday ROI 6%. Because of the 1 minute zone, we achieved only 3.7% ROI. And why? Because the margin cost is around 3 lakhs. See, for earlier 2-1, the margin one is, I think the first one is around 1.5 lakh. And here 1,30,000 margin, second one, but third one is 3 lakhs rupees. Your margin, or a little over 3 lakhs. So that's why your ROI is reduced, even though the profit is more compared to the remaining trades. But ROI is reduced because of your capital, higher capital for buying. But if you would have taken a trade in short segment, let us assume invested only 1.5 lakh, you would have got half the trade. Maybe around 5,600 rupees, 700 rupees, yeah. Maybe 5,700 rupees profit you would have got. Okay, so these are the 3 successful trades, and remaining we didn't get the trades. The first one is IEX. IEX is a daily high liquidity supply zone, and we didn't plan any trade also. The reason is this drop, 2 base candles drop is a zone, high liquidity zone. I fine tuned up to 15-minute zone only. The reason is this zone was created in the year May 2022. But in TradingView, the 1 year data is only available. Some people will be having only 6 months data only, 5 months. For professional scheme, they are giving up to 1 year, maximum 5 minutes. And this is beyond that data, so we cannot fine tune these 5-minute zone by using TradingView data. Maybe if you are using any other software and intraday data is available till 2022, probably you would have fine-tuned these zones. So I have fine-tuned only up to 15-minute zones because 5-minute zones are not clear. So did not plan any trade opportunities. But anyway, price did not enter into the zone. So we need not worry. And the next one is Bharti. Bharti already we have taken. Bharti Airtel already yesterday we have taken a trade here. Yesterday I explained about how we can use entry buffer based on the price action. That's a very important concept. Everybody should listen in our yesterday's video. I already added that video into the important videos and analysis and videos playlist. Later also you can listen that video. That's a new concept I explained. And today, see, price did not reach up to this area. You may ask a question, maybe yesterday a new 15-minute zones are created, might have created. Yes, actually a 15-minute zone was created yesterday, a new 15-minute zone. See here, you have a drop, this is near to this only, this is the one. You have a rally, you have 2 base candles, again you have a rally. Of course, a drop base rally is also there. Anyway, prices did not enter into this area. Today prices entered up to this area. This is a drop base rally. But why you didn't plan this trade? You may ask a question. Why I didn't plan a trade here? If I would have planned, see how much profit we would have got a very good profit. Maybe you would have got a profit maybe around 8% intraday ROI you would have got in this trade. You may ask a question, why I didn't plan a trade in this area? The reason is I didn't find a proper fine-tuned 5-minute structure in this area. Let me show you. If I would have drawn this zone, this is the 15-minute zone. I can't fine-tune this zone. Okay, it is slightly pierced, that is a different story. It will be within your stop buffer. But first of all, here we didn't have a proper fine-tuned 5-minute zone. There is no proper fine-tuned 5-minute zone. There is no proper legouts. We have a drop candle is there. We have a rally candle is there. In between there is no base candles. Here you have a base candle is there, but this is not a good candle to consider legout. It is within the zone. Entire candle is within the zone. You can't plan legout like that. Legout should come out of the zone. So that is the reason why we didn't plan any trade in this zone. But you may ask a question, can't we draw rally, base, rally like this? Then we would have got a trade. See, if you would have drawn a zone like this, a 5-minute zone, you would have got a trade here. But I am not convinced with this candle as a base candle. Maybe if the body is a little more less, I would have considered this as a base candle. I consider this is a rally candle, medium size rally candle, again another rally candle. All these are all I consider as a rally. I am not convinced this is a base candle. Because of all these reasons, I am not thinking this is a valid zone, and moreover there could be other reasons why for this movement within this candle. Moreover, this is a 9:15 candle. Please remember, if you look into the 1 minute, you will understand. This is the morning 5 minutes, 1 minute 9:15 candle price action. This is the one. And this entire movement, today's movement, is continuation to the yesterday's price action. This is the one. First, let me delete this. Yesterday we took a trade, right? It's a continuation to that, this entire thing. If anybody yesterday would have holded this price, this particular stock, okay, intraday we exited. If you are not an intraday trader and if you have holded this, probably this is a continuation to yesterday's movement. That's it, all these swings. But today, definitely we would have taken a trade if price again entered into this below this blue color line area. Maybe next time what I do, I will slightly move this blue color below now. Now once it crosses below, immediately I can plan a trade. Because it has to consume the order flow and come. Probably either blue color or within this area, we can plan. But anyway, today we didn't get a trade. So this is not a valid, there is no any valid trade opportunity to plan a trade here. Entire price action is continuation to our yesterday's order flow. Okay, this is about Bharti Airtel, Godrej Properties we discussed, Chambal Fertilizers we discussed, and next one is Coforge. Coforge is again a 75 minutes high liquidity zone. If you would have noticed, I didn't fine tune this zone. So according to our software, we have a rally candle. These three are base candles, and this is a drop candle. This is the medium size base candle. This is a small size base candle. So we have three base candles. This is the way software consider this zone, and hidden body you will add. So this entire thing is going to be a big drop candle. But when I try to fine tune, look into the 15 minutes price structure. It's not at all good price structure. You have a drop, all these base candles. But previously it took a trade, you may ask, because we have a drop base, drop is there. Previously just pierced. And anyway, this is pierced, we can't consider now. But above that, the price action is not proper. Probably it could be within the stop buffer. So there was a move after that, after piercing. But now it is not valid. This is not today's data. This is previous. This is on August 6th data. But we have to consider here. So it's not valid. But anyway, today price did not enter into this. So continuation to this price action, it made a lower high and then again further moving down. See here, let us assume this is the high. Now it made a lower high, continuation to this price action and further moved. Price did not enter into this zone. You may ask a question, can't we plan a trade again considering we have a rally, three base candles and a drop like this. That way we can plan. But somehow I didn't, because the too many candles are here, 1, 2, 3, 4, 5, 6. Somehow I didn't feel like, and risk also is increasing, 5 minutes. So because of all these factors I just ignored, I didn't really fine tune this zone. Anyway, today prices also did not enter. Nothing to worry about this. And Navin Florin we already discussed. And the last one is Tata Power. Tata Power is also a 75 minutes high liquidity supply zone. We have a drop, base, a drop. This is but today's price action did not enter into this zone. But why I didn't fine tune? The reason is 15 minute structure is not good. See the 15, we have a drop candle, we have a drop candle, we have a drop candle. So no proper price structures. Even if you look into 5 minutes also, it's not very convincing here. All these candles. So that's why such kind of zones will be violated easily, because you already learned in lesson 16 when a zone will be violated. Such kind of zones will be violated. But anyway, price did not come. Continuation to this price action. Price movement is there. So that's why they didn't get. But next time when prices enter into this zone will be violated easily. So these are the high liquidity zones generated by our NeoStock software from our yesterday's list. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.